A great comment here from James asking, Sven, you're always expressing and talking about the risks, which is the core of value investing, but when are you buying something? Are you invested at all? Well, I have to tell you here, I am fully invested. And there was also this comment, good luck finding great businesses at a P ratio of 10. That's my strategy, and that's why I'm fully invested. Another comment here, because there is real investing and then there is YouTube. I try to keep YouTube educational and I cannot really discuss my stock picks. I run a research platform where I have a diversified portfolio, my personal portfolio, and the model portfolio that represents value investing on the platform. On my personal portfolio, I'm buying every month, I'm 100% invested, and all the money I have available for investments is invested in that portfolio. If I look at my model portfolio, which is representative of the research on the research platform, you can see here that I recently, last month, closed 2 positions that lowered my Chinese exposure, and now the cash is 12%. Well, 16% I already bought something back here, and now I'll wait a little bit for some real opportunities. But you can see here, Amsterdam Commodities, Archer Daniel Midland, as food got cheaper during last year, I bought a little bit of that and increased some portfolio exposure. If we look at this company, P ratio of 10, that's about the good luck of finding that dividend yield of 6 and likely growth long term of 5%, which is a great investment no matter what happens. Then we have the diversified portfolio. Oh, by the way, my research platform has a 21-day money-back guarantee, so you can check it in the link in the description below, check my picks, check my investment, check investment style, and really get great context also to all my YouTube videos. I think that's essential. If it's not for you, just send me an email at investwithsven@gmail.com. Also, send me an email if you have any kind of questions that you think I might help you with. So, to answer the question here, this is the video about my portfolio. How am I balancing things? When I see value, the model portfolio goal is 10 to 15%, has been doing 15% over the last 7 years per year, but based on the fundamental basis. And when I find those investments, I invest. Now I'm waiting perhaps with the last 10% of the portfolio to find something better, but each month we add a little bit, and then also the dividends reinvested, and those things start to compound over time. For example, I sold China at a 2x. Perhaps I shouldn't have, perhaps I should have ridden the wave, but I try to manage risk first. And the key is that when things actually get ugly, then this is very ugly and people capitulate, but you have to be ready to buy more and increase your wealth long term. As I said during the beginning of the year, I was accumulating slowly the food stocks that were starting to get interesting, not complete bargains, so there you see the lower exposure. And yes, be very careful, even with what I talk on YouTube, get information, but then make your own decision based on information that you have accumulated, and always ask yourself, how would this impact my wealth and my portfolio? So, what would I do if the market crashes? Well, I have a P ratio of 10 here, so even if the market crashes, these businesses should still be producing earnings, producing dividends that I can reinvest. I invest a little bit on a monthly basis, which is then again, and there is the cash option, and also there are some hedges that should gain on volatility, and if the market crashes, that should go up, and then I can rebalance. So whatever happens, I think I should be okay with the market. My diversified portfolio, which also for me means higher risk, because I am not as balanced on a risk and reward situation here. I have a lot of stocks, and when you have a lot of stocks, it is likely that will behave like the market. So I will have some balancing. These are all P ratios of 10 to 15. The expected return is close to 10%, and then I buy. When it's just 10% expected, I buy a mid position. If it goes up to 15%, I buy a full position. That's the strategy here. That's how it's managed. The cash still for some positions there, but the dividends can be reinvested. Plus, I think I paid 100 here on fees because it's a small idea generation portfolio for those that need more diversified ideas. So that's what I do. As always, I say, check really my research platform. Here are 2 videos, my performance and what I do, to get a better context on what I do.